In today's video, I'm going to be focusing on what's happening in the US situation, a little bit more on Bitcoin today, and a little bit of terminology discussion on FOMO and FOGO. Hello and welcome to another acysecurities daily report video. My name is Alastair Schultz and I'm going to be your host for today's trading journey. The first thing on the cards is I'm just going to give you a bit of an overview about what's happening at the moment in terms of sentiment around the globe and more particularly in the US. It is a running hot market at the moment. We know that equities have been running hot for more than a year so far, and we are seeing that they're all a result of sort of those pandemic stocks that are getting the big numbers up there. Of course, tech valuations are quite extreme as well. We've had them running that way for quite some time, and the estimates at this stage are really that we're going to be seeing companies valued at about 3 years ahead of themselves. And if you look at them, you're seeing that they're getting some of that revenue in, but they're anticipating it from much further in the future than probably what is reasonable. We don't know what's going to happen in 3 years. Most business plans that aim for 5 years never hit the mark. 3 years is not much better. So can we really forecast at this stage really where they're going to be in 3 years' time? I think that is a hard stretch to go, but of course there is some level of understanding as long as you take into account that some of these percentages that they do use when they make estimates do have variances available to them. Now, after 5 hot sessions in a row that we've seen in the past week, the last 2 days have been a little bit lackluster. Monday was quite negative, today has been quiet, including in the Asian session, which has had some mixed results as well. Now, what I'm seeing is going on is that we're seeing US investors and investors in general take pause about what's going on. People are starting to question if those stocks are overvalued, how the US yields or the 10-year Treasury yields are going to impact when it comes to financial easing or the easy ability to gain finance. And of course, they're a little bit concerned about the idea of inflation and it running hot. We know that it's going to be running hot. That's what the Fed has mandated they're going to be doing. Other countries don't have the same sort of problem just yet. And of course, neither does the US. It's not running hot at the moment. But it might mean that the inflation ramps up a little bit quicker than the Fed is really anticipating for, opening the door to increasing rates earlier than expected. So there are a couple of things here that are at play at the moment, bringing a little bit of questions on the mind. Now, in generally thinking and generally trading, I probably wouldn't be looking too hard at some of my tech stocks at the moment because they are obviously the pandemic winners and probably some of those that are a little bit overvalued for what they really are right now. And they're the ones that people are really thinking about. Though there are still opportunities in mining, healthcare, and the energy sector, which is seeing a few new innovations at a variety of different companies. So it's worth doing a bit of a deep dive and finding the right one for you. Now, looking a little bit more broadly at the US situation, I'm going to bring the focus down a little bit more now instead of what we were looking at before. The first thing I really want to look at is obviously the coronavirus situation is not that great. We are getting vaccines out there, but the most important part is actually coming from the political side and the fiscal stimulus side. We've heard about what's going on with Donald Trump. He's been banned from Twitter, Facebook, Shopify, Parler, a few other different social media companies at the moment. And so now we're starting to take a bit of a closer look at what's happening in some of these very powerful companies capable of reducing free speech. Now, at what point does that become a problem? Should they have banned Trump in the first place or not? Should it have been done a long time ago? Should he be impeached, which is now what's coming from the Democrats? There are a lot of different things going on right now, but I'm going to stick to each point as we go through them. So starting with Donald Trump, since his picture is in the background, Twitter bans, and of course, the impeachment side of things that's coming from the Democrats right now, it is much more of a tactical behavior. At first, I was looking at this and thinking, well, maybe it is really just a little bit of media attention or the final nail in the coffin, if you will. But really, it's about stopping him from being able to get back and run for presidency again in 2024. So there is some tactical reason for actually going after Trump now, only a few days from the inauguration swap over process to Joe Biden. So that's the first side. The second side that I'm looking at here, and this is separate from Donald Trump, is what's happening with some of these big companies like Facebook and Twitter. Their stock prices have come down a bit since they have banned his accounts. banned certain hashtags and tweets that will, support this ideology that's sort of going on at the moment. And there's probably a little bit of mania involved as well, but regardless, they're all getting sort of called into court and to hearings about anti-competition rulings. Finding out whether they are actually doing what they're meant to be doing or not. Now, in this instance, you would think that after you've had a whole series of hearings in the last year, being in 2020, where we've seen lots of anti-competition practices being performed by more than one entity, Amazon, Facebook, Twitter, all of them have really been focused on that front. And now we're seeing them restrict free speech. And so that does indicate that there is probably a little bit too much power there. And that's certainly not what I'd be doing. If that was me and my company, I'd be wanting to lay low right now. And I would not be trying to impose any will on political matters or government matters for that. So in this instance, it's a little bit concerning about how much power they actually do have. But either way, what they've just done has actually highlighted the issue. And I would be anticipating seeing more hearings to come in this year if they're not already being thought about and put on the table pretty soon. So looking forward from that, how is all of this really going to impact what we see from a stimulus side of things with Joe Biden? Now, the Democrats have to be careful about how they actually go about the impeachment, because if they get too many of the Republicans' noses out of joint, or they upset the apple cart too much, they're going to struggle to get this stimulus bill. And what we don't want is a repeat of what's happened. Speed is really of the essence here. We're going to be focusing on some of those same points that we saw last time. It took 4 months to get the last stimulus bill in. We had a lot of issues with trying to get an agreement across, lots of negotiations, and the same sticking point remains all the way through. So this time round, we don't want to have that happen. We want to see that speed hump get transitioned over smoothly, as opposed to the mound getting bigger and bigger and bigger. And of course, we don't want a second speed hump. Any of those delays are going to impact the US economy. Now, so at this stage, I'm thinking that what we're going to be seeing is obviously the same sticking points when it comes to stimulus out to individuals between $600 and $2,000. We're also going to be seeing some challenges towards state and local aid when it comes to it down at the end of the crux. Now, of course, conservative Democrats are already standing in the way. We've already got some Senate members opposing what Nancy Pelosi and Biden are kind of suggesting. And at this stage, we know that they need about 60 votes, which means if they don't have the conservatives, even if they did have them, they're going to need to rely on Republican votes, which is why it's all the more important that they do it tactfully when it comes to the impeachment side, if they do decide to pursue it. Now, moving on from the side of the US politics, we are going to have a little bit of a talk about FOMO and FOGO, the fear of missing out and the fear of getting out. It's been one of those words that has been playing on my mind, but it has also been coming up in a lot of other articles. A lot of other analysts have been talking about it recently. And so at some stage, it is likely going to be coming across you guys as well there at home. When it comes to FOGO or FOMO in either instance, we know what the implications kind of are. In FOMO, we have the fear of missing out. The best example of seeing all of this was in March in 2020 when stocks started rallying again. Everyone wanted to get in. There was a lot of hype, a lot of buzz, a lot of speculation happening. And now it's the balance. It's the other side of this. The fear of getting out. When should I be getting out of a position that I've made a fair amount of money on so far? Should I hang on and try and go for that little bit more just to make it an even number? Now, from my own experiences, I know that if you're trying to get $1,000 break for the profit and you're at $999.99, it'll quite often turn around. You'll experience the full range of greed right the way through to fear when we talk about the emotional trading cycle. Of course, it's not the only matter to really be contending with here. Whenever you get that effect of FOGO, which is where you might find, and I quite often find it to be, that moment when you get into bed and you can't sleep because you're thinking about a position, generally I consider that to be the wrong trade to be in. And quite often, if I feel like it's the wrong thing and I can't sleep over it, I will go down, get up out of bed and close my position to make sure that I can sleep and that I have my mind and I'm not sleep deprived for another opportunity down the track. But either way, you should be keeping that all in your head at the moment. So if you do find yourself feeling like that, seriously consider either closing your position or at least reducing some of that risk so you're not feeling like you have to keep an eye on it all the time. And at this point in time, you are going to see more news about it. Stocks have run hot. We're seeing people question the valuations. We have treasury yields rising in value as well as the US dollar coming up. So there is enough cause for concern, not to mention we have the inflation worries and a number of analysts being a little bit skeptical on where things are sitting right now. Now, moving on from FOMO and FOGO, the best example of seeing this is actually in Bitcoin at the moment. We've seen it move from 10,000 to 40,000, very short succession, and now it's dropped down about 10,000 back down into the $30,000 bracket again. These wild swings we spoke about yesterday, and we do see it happening, quite regularly, but it doesn't take much for it to happen, because when you think about it, 95% of all crypto or Bitcoins in circulation are owned by 2% of wallet holders. So you've got 2% holding 95% of all of the available supply. Now that's a problem, because it means if one trade or one person decides to take a large trade, you are going to get some of those erratic swings. And I'd say that that's probably a little bit of what's happened yesterday. People have seen prices going up and they thought, oh, I'll get out here and take a bit of profit. Now, whether that goes up, whether it's a bubble, they all remain as numbers of speculation. People don't know whether this is a maturing asset or whether it is changing into something else. In my mind, whilst I do see the value in certain aspects of cryptocurrencies, I'm not someone that's willing to put the money on the line here for this, especially when there is so much volatility. It has everything that I love about trading and everything that I hate all in one package. So therefore, I tend to stick with the side of things that I hate and try to avoid it, but it doesn't mean I don't enjoy watching it. So I will keep a close eye on it. Some of the things that you might want to consider if you do trade on Bitcoin, the fundamentals are not always as they seem. And I think the most common occurrence or the best way observable notion of fundamentals working have really been related to US unemployment. So check out when US unemployment figures come out and what the reaction on Bitcoin is, because usually you will see some movements in price, and it's usually the opposite to what you would see on equities on that sort of data. Now, moving on from that, I am just going to cover into the news for today. We have Japanese economy watcher sentiment. That is an important one to watch to see how the people in Japan are feeling about the economy in general. And we don't get it too often, but when we do get it, it's usually very, very good information. Now, we've also got the NFIB Small Business Index coming out of the US. FOMC member Brainard will be talking much later in the session, and 10-year bonds will be coming out at about 5 a.m. Australian Eastern Standard Time in the morning. So we know with all the inflation talk, the treasuries are rising in price, the Fed is likely going to be watching those 10-year bonds fairly significantly to see if there is any creeping up of the inflation, the yields on your bonds, but also on whether there is any creep happening on the inflation side of things. Now, that's all I've got for today's video, but if you do have any questions, please feel free to shoot me an email, or of course, get in contact with any of my socials, which are available on the screen behind me right now. Don't forget to like and subscribe to this video so you can get more great content from ACY Securities and me. And of course, have a great trading day ahead.